Something really interesting happened to me this week. For the first time in probably a couple years, I had an appraisal come in for clients of mine that was low. So what happened was a couple weeks ago, my clients got in contract on a brand new house for $445,000 in North Meridian. Now, the builder, I won't say which one, but the builder was offering a promo of $25,000 in concessions at closing. So my clients were really excited. They thought, okay, $445,000 minus $25,000 puts the purchase price at $420,000. Unfortunately though, when we called up the lender reminded us that if you are buying a house as an investment property, which is what my clients were doing, you are only allowed by law a maximum of 2% of the purchase price in seller concessions that can be used for rate buy downs or closing costs. So my clients had to find another way to, quote, spend this $25,000 that the builder was offering with this house. So what they ended up doing is they ended up making a deal with the builder to install rear fencing, landscaping, sprinklers. They bought a washer and dryer, a fridge, and blinds. Now, when you add all of that up, it all added up to $21,000, including the 2% in concessions for closing costs. So that left another $4,000 that my clients hadn't used yet. And so I was a little bit skeptical, but I called up the builder and I said, hey, you're offering a $25,000 promo. Can you just take that $4,000 that is left over and just reduce the purchase price by $4,000? Now, I didn't think the builder would agree to that because they don't usually like to give you anything. Builders like to be in control of everything. But amazingly, the builder said, yes, we don't want your clients to miss out on any of the money. And so they lowered the purchase price by $4,000. So the new purchase price was $441,000, including all of the landscaping and refrigerators and washer and dryers and all of those things. It was all fine and dandy until the beginning of this week when we got the appraisal back and it came in at $434,000. So about $7,000 less than the adjusted purchase price. So I wrote the builder and I said, hey, appraisal came in low. My clients would like to ask you to lower the purchase price so that it matches the appraisal. So the builder hummed and hawed a little bit. Next day gets back to me and he says, we'll do this. We will meet you in the middle. We agree to lower the purchase price to $437,500. So I talked to my clients and we thought, you know what? It's nice that they're giving us $3,500, but really we feel like the purchase price should match the appraisal. I mean, isn't that what an appraisal is there for? So we went back to the builder and we said, thanks for meeting us halfway, but we want you to go the full way. We want you to make the purchase price the appraisal price. So they hummed and hawed. Next day they get back to us and they say, we'll agree to do it. We'll give you the purchase price for what the appraisal came in at. So all this made me think, what's going on here? Why are builders giving up so much? $25,000 in concessions. They're willing to lower purchase prices, which you hardly ever see. Are builders afraid of maybe what is coming in the next couple months, and so they want to offload their inventory so they don't get stuck with homes they can't sell? I think the answer is no. I think there's two things going on here. First, as it relates to the appraisal, what happened is the builder had a $25,000 promo on all of the homes that they were building. And what they did is they actually changed that promo last week. They changed it so that rather than offer $25,000 in concessions, they actually just lowered the purchase price on all of their homes by $25,000. And so the builder said that now that doesn't include rear landscaping and all of the other things that I mentioned earlier. So the builder said that if the buyer wants, he can take some of that $25,000, which has been applied to the purchase price, and use it for landscaping. So raise the purchase price back up $25,000 and then get that $25,000 in concessions to be used for sprinklers, sod, grass, all those things. So what I think happened is because the builder lowered the price on all of their homes by $25,000, When the appraiser went to appraise my client's house, he saw that all these houses were on the market for $25,000 less than what they were 3 days ago. And probably others closed on homes with that applied promo, and so the appraisal came in low. Now, you could ask the question, why is the builder offering $25,000 in concessions to begin with? I think the answer is builders right now are just trying to ride the spring buying wave. Right now, there are a lot of buyers in the market. I've been actually really busy the past few weeks and months, actually. And I think what the builders are trying to do is they're trying to ride that wave to get rid of some of their inventory while the market is still hot. So I don't think they're afraid of the market crashing. I think they're just trying to ride the buying wave. In fact, if you look at sales from this past month, they're actually up by about 10% month over month. The median price, it is true, has gone down a little bit here in Ada County. Just this past month, the median price was $545,281. So it went down about 3% month over month. Year over year, we are a little low. We're about 1.9% or about 2% lower than we were last year. Days on market, though, are about the same as where we were last year. About 40 days on average is what it takes to sell your house here in Ada County. The month supply of inventory the last month was 2.69 months. Which has been higher than it's been for the past few months. Hey, if this video has been helpful so far, hit the like button. That helps this video go out to more people like you. Thanks. So having more listings has definitely been a positive thing for buyers here in the Valley. We're still in a seller's market. I just put in an offer for clients a couple weeks ago where we were $40,000 over list price and we still didn't get the house. So there's still interest in buying, but having more supply on market has given buyers more options to choose from and ultimately has given them a little bit more buying power recently. But let me shift gears now to what is happening in the US housing market so we can compare what is happening here with what we're seeing nationally. The median actually was up just this past month. If you look at the median price for all of the homes across the US is $414,000, which is about a 1.8% increase year over year. Now that's actually an all-time high for the month of April. And that actually is the 22nd consecutive month of year over year increases for the median across the US. But as I mentioned earlier, the inventory is higher than it has been over the past several years. Just this past month, across the US, there's about 4.4 months of supply. That's the highest that we've seen over the past 5 years. Look at what Lawrence Yun said about the inventory. He says at the macro level, we are still in a mild seller's market, but with the highest inventory levels in nearly 5 years, consumers are in a better situation to negotiate for better deals. And this is something we're seeing at the micro level here in the Treasure Valley as well. I think my buyers are able to get a little bit more than they typically have been able to get over the past several years. Nationally though, sales are down. They're down about 2% year over year. Listen again to what Lawrence Yun has to say about sales. He says home sales have been at 75% of normal or pre-pandemic activity for the past 3 years, even with 7 million jobs added to the economy. Pent-up housing demand continues to grow, though not realized. Any meaningful decline in mortgage rates will help release this demand. And I agree with him fully. We are seeing an increase in buying activity here in the Treasure Valley. We're still not up to where we are in a quote normal year though. And all of this is related to the mortgage rate, which is what I've been talking about for the past several years, as I'm sure you know. Now, even though sales are down, that doesn't mean that the housing market is in trouble. A number that I like to keep my eye on is the number of distressed properties that were sold. So these are foreclosures or short sales. Just this past month, 2% of all homes sold across the United States were distressed properties. And that's the exact number that it was 1 year ago. So by and large, people aren't selling their homes because they're not able to make their payments. We're not seeing any change in the number of foreclosures or short sales. The reason sales are down is because the mortgage rates are higher than we would like them to see. Just this past month, Fannie Mae's average on a 30-year fixed loan was 6.81%. Now that is down slightly from where it was a year ago. Last May, it was at 7.02%. it's still not where we would like it to be. So what's gonna happen in the next coming months? This is what we all want to try and figure out. Well, the Fed just met, you may have known, a couple weeks ago on May 6th, and they decided once again to hold the federal funds rate steady right at about 4.25 to 4.5%. Now, there had been some talk about lowering the federal funds rate by a quarter point, but they haven't done that yet. And the reason is they still are uncertain about what the economic future of the US is. Tariffs is still an open question. There is still some risk of inflation sort of cropping back up, and unemployment as well. So until they have a little bit better understanding or a little bit better idea of what may be in store in the coming months, the Fed has decided to hold off on any rate cuts. Now, we all like to try and tell the future, so here's an interesting chart that I found of the 5 biggest mortgage lenders in the US. If you average their projections for where we'll be at the end of this year, you get to 6.46%. Now, whether or not they're right, we'll just have to wait and see. But I think it's interesting that they are projecting that we will be slightly lower than where we are right now. Now, if you run into somebody who says, this is what's gonna happen in the housing market in the coming months, here's the one question you just need to ask him. How many houses did you buy in 2008? And the answer is he probably didn't buy any, because it's nearly impossible to time the market. None of us know how low the market will go or how high it will rise. If we knew the answer to that, we would have bought 15 homes back in 2010 when the market was at its lowest, and we'd be sipping lemonade in Hawaii. Timing the market is nearly impossible. And so that's why the old axiom, time in the market beats timing the market, is really the correct answer, because it's nearly impossible to tell the future. So summarizing all of this, what's happening here in the US? We're at about 75% of normal as far as sales are concerned. The supply of inventory is at the highest level that it has been in the past 5 years, which is why we have seen some softening in certain areas, like here in the Treasure Valley. Days on market is about normal, about where it typically is. The interest rate has been stable over the past really year, which is unfortunate because we would like it to be lower, but there's some projection that it will be somewhat lower in the coming months. How much? We will just have to wait and see. Thanks so much for watching. If you have any questions about real estate here in the Treasure Valley, please reach out to me. I'd love to help you.